Yeah, welcome everybody for this panel. Welcome everybody, and this time we will talk about the digital euro, especially how it can potentially be used in the capital market. We have a couple of very renowned speakers here. Deutsche Bundesbank, Société Générale, or Forge Project, Andreas Bieber, Commerzbank, and Simon Streiter from Deutsche Börse. And before we directly start, I would propose that everybody quickly presents himself briefly. Maybe everybody giving a little bit of background about himself as a person, but also about the company or the organization as a background, because it's very important for the audience to get a little bit the context of who is speaking exactly. Who wants to get started? Maybe Jean-Marc, would you like to get started?
Yeah, sure. Hello, everyone. Thank you for having me on this panel today. It's a great pleasure. I'm Jean-Marc Stenger, working for Société Générale. I used to be Chief Investment Officer for asset management arm, Lyxor, up until 2 years ago, basically, where I jumped into a new project and launched a new subsidiary of Société Générale, so-called Société Générale Forge, who is dedicated to building our capacities in the field of digital assets.
Excellent. Thanks very much. Maybe, Andreas, would you like to take over, also presenting yourself and your company briefly?
Yeah, thank you, Philip, and hello to everybody. My name is Andreas Biewald. I am working for Commerzbank Treasury, and I'm pretty much focused in my job on liquidity in infrastructure, in payment and settlement infrastructure of today and, of course, of the future. So I'm focusing on instant payments, T2S, as well as on the digitalization of assets and cash. So we are involved in 2 major projects I will revert on later on, where we're trying to get the DVP up and running and trying to tokenize assets, and in order to enhance the liquidity fluidity within the bank.
Okay, we are going into this detail later on. Julian, would you like to add a little bit more context about you and your company or your organization? That's a better word.
Thank you very much, Philip. My name is Julian Reichel. I'm the Director General Payments and Settlement Systems of the Deutsche Bundesbank since the 1st of May this year. The Deutsche Bundesbank is the German central bank, and it is an integral part of the Eurosystem. I'm since 23 years in the Deutsche Bundesbank. I started my career at the economics department, and after a short stay in the German Chancellery in Berlin in the year 2009, when I headed the project group on financial market stabilization, I held different positions in the Bundesbank. In the last 3 years, I was Director General of Economic Education. Thank you.
Excellent. Thanks. And finally, Simon, please also some background.
So Simon, I'm head of digital assets at Deutsche Börse. I've been previously working with Commerzbank, so Andreas being a former colleague, and having worked together on projects, which I will look back with joy. And now trying to build an infrastructure for digital assets at the German Stock Exchange Group, basically. So especially in the post-trade side, in the Clearstream space, to really have a new kind of market organization model as well, I would say, because we have to move to some extent here from a central market organization to a decentral market organization. And payment and settlement is here an integral part of the whole value chain. And so this is something that we have to also change in the type of market structure where possible.
Perfect, thanks. And some words about myself. My name is Philip. I'm working at the Frankfurt School of Finance and Management. It's a small university in Frankfurt. It's the second university there. We are focusing on finance and management, and I'm running the blockchain center there because 4 years ago we found that this technology will change the financial market sooner or later. That's why we said we have to also help young people understand this, that such that they then at some point of time can be employed by Commerzbank, Deutsche Börse, and elsewhere sooner or later. Yeah, and today we would like to talk about the digital euro. We would like to focus on settlement processes. Why does the digital euro potentially make sense? What are institutions doing? What are companies doing in the fields? And to get started, I would propose that we start describing how the world is currently looking like and how payments are currently made, just to give some context, because we then go on and describe how the future potentially could look like, but therefore we need to understand how we are currently doing it. So therefore, maybe Andreas, you could start. And the question once again is, how are payments currently being made? And what exactly is T2S and how does it work?
Okay, that's quite a lot, but I try my best. Payments, as we heard already this morning on this conference, are very innovative area of infrastructure. Payments getting faster, payments getting smarter. Request to pay, we heard this morning, will play a key role, as well as instant payments, especially tips, which will be implemented by the Eurosystem by the end of this year. It is already implemented. It will be mandatory by the end of the year for us as banks to join. So on the payment side, there is a huge innovation going on. Based on the target system, based on other ancillary systems handling payments in commercial bank money versus payments in central bank money. But I'm sure Julian will update us here further, because that is the main domain of the central bank. On settlements, we are part of T2S. That's the European Settlement Platform. It's important. It's a platform owned by the Eurosystem and the CSDs. There are 21 CSDs out of 20 countries, where we exchanging collateral or securities versus central bank cash. This securities world, if I compare it with the payments world, is a bit old. Not outdated, but older and less innovative than the payment world. So here we, as I mentioned already, we're talking about 21 different CSDs. The idea of T2S was to enter the system via one CSD. That is theoretically possible these days, but we still have hurdles in this mechanism which are leading to fragmentation of collateral, a huge intraday requirement, and national regulatory requirements who are still not offering us the promised single entry point. Some people might say that's not correct. Out of my daily business in collateral management, repo trading, and money market, I can still report that we have links into each and every country. Some are based on direct connections, some are based on Nostro connection, and we are still operating hundreds of Nostro accounts, and I'm switching now to the payment side, hundreds of Nostro accounts worldwide in order to process payments in other currencies. So the operations or the handling, especially from a liquidity point of view, and especially from an intraday liquidity point of view, is a very, very liquidity intensive, work intensive, and resource intensive mechanism, both on the cash side and on the custody side. And we in Treasury of Commerzbank see the new technology as an utility and enabler to get the processes faster and, of course, cheaper.
Okay, you already answered part of the questions I wanted to ask next. That would be,
sorry.
and let's continue with this. No, this is perfectly fine, but the question then would be, what is currently working well, and where can we improve, or what is currently maybe not so working well? So some of these points you already addressed, but maybe Simon, would you like to add on this question once again? What is working well, and where do we have some room to improve?
Yeah, I think Andreas pointed out nicely the market fragmentation that we still see. Yeah, and then I think this is part of the problem, is that we always have everybody keeping central accounting systems. And we do have to remember, when it comes to currencies, the way how we process payments and cash flow is still accounting. And counting means nothing else than really counting how much money you have. And if you have many people counting the same way, that to check if you have the same amount of money, then this is double effort. And with the potential also for miscalculations and need for reconciliation, which is actually giving us the lags in the payment side, and then also in the settlement side, and ultimately the need also to provide risk buffers for especially counterparty risks, because simply the payment takes some time. And I think that one way how we could improve this, and this is not necessarily given, however, that it's the single solution, so to say, but one way is definitely to have multiple financial institutions within one network, where the asset is actually moved, and we're not accounting for the asset, but the actually is moving. And this is what we have when we talk about really digital money, what we are talking about to some extent. Digital money is not digital accounting. Many people do not see the difference, but there's a big difference. At one time, everybody sees that an asset is really being moved. On the other way, only one person sees that in his account something has happened. And he or she has to check back, basically, if in the own accounting system this is being reflected. This is a market structure that works pretty efficient within its limits. So we have already made accounting already perfect, almost, I would say. But accounting has its limits. Still, everybody has to count on its own to check if it's valuable or not. If we move to a network where everybody really sees that the asset is being moved, it's similar to really seeing that somebody on the table has pushed some money over. You do not need to have separate accounting for that, because it's obvious that somebody is now owning this kind of asset. And I think, especially as Andreas has pointed out as well, if we think about not only like one currency, but many currencies, then it's really getting complex. And if you have multiple currencies within one network, then it's really getting interesting, because we are talking really about PDP as well, within one network. So really true exchange of multiple different currencies within one network, within many participants. And I think, for example, if we look at our own house, Clearstream, for example, has more than 100 currencies that we are managing. That's incredibly a lot. And we're offering this to our clients. I think it would be much more efficient if we could do that like within one network, where we can actually exchange directly different currencies also. And I mean, really like regular currencies with each other.
Okay, excellent. Maybe, Julian, would you like to add here maybe on current weaknesses and what does work very well, what does work not so well, where is room to improve?
Yes, thank you very much. I think I can share the position of Simon that the current system is working more or less very well in its limiteds. And with T2S, the Eurosystem has successfully implemented a European hub for security settlement and central money. This is clear, and it is, at least to my impression, highly efficient and secure. And but what is also what one has to acknowledge is that the share of cross-border settlement is low according to our T2S statistics, and a considerable share of cross-border transactions is continued to be settled via banks within their traditional networks. And so there is some room for improvement. And it is also worth mentioning that we are doing our work to improve the situation, not only with regard to cross-border settlement, but with regard to our target services overall. We do have some big projects with regard to the current market infrastructure project, like T2S consolidation, ECMS, ORTIPS, and so on. And this is the point I want to add to this.
Excellent. Jean-Marc, would you like to also add a couple of points which might not have been mentioned previously?
Yes, sure. And maybe I might bring a slightly different perspective, since I'm sitting in the capital market part of the bank and not the, everything which is tied to cash management directly. So I would be more on the user side, I would say, of the payment network, or at least for our clients. And what we see in our area of responsibility, which is basically to help our customers, corporates, financial institutions, to go to the market through the issuance programs or the advisory services we do provide them to, let's say, issue securities, bonds, or any other form of security on capital market. That we are with this very massive and structural trend we are seeing with blockchain technology flowing slowly into those capital market activities. We are witnessing a strong digitalization of the securities themselves, and not without entering too much into the technical details, but what we are working on currently, and we already did a few transactions, but we see, as I said, this trend strongly accelerating. We see that we are going, I mean, capital markets across the world in a direction where securities will be tomorrow digitally native, meaning deployed natively, at least for part of them, into a global network, which would be probably a blockchain or a DLT-like of infrastructure, but which literally will be global marketplace, where these assets will flow more rapidly, more securely, which will be issued quicker than what they are today, and which will also obviously be settled more quicker than they are today. So on the payment side, on the infrastructures, Target2 or any others which are supporting the settlement part of this, but which are also the foundational layers we need to provide, for instance, collateral management services, which are incredibly important for the financial ecosystem. We need to have the same trend and the same infrastructures being built to support a world where assets will flow even quicker than today and on an even broader marketplace, I would say.
Okay, excellent. We come to this back in a second when we ask once again, how can digitization help? And then we bring together Simon's and your Jean-Marc's perspective. But before this, let's be very clear on the current role of banks. Maybe this question would be for you, Andreas. What is the current role of banks in this network, which we just have been described, and what is also the role of intermediary? Is it, for example, reconciling cash and assets or securities, or is it about maintaining payment channels towards other countries? What's the role of banks and intermediaries in the current system?
Yeah, the role of banks is very simple. We're trying to get the asset and the cash together, whether we do that on a new issuance or on a trade finance. We're serving our customers' needs to export and so on. And we are, of course, customers of intermediaries such as custodians and payment service providers, beside having accounts in central bank, more or less in every major country. So we have, as I mentioned already, a lot of these custodians connections, and we have a lot of Nostro Cash connections in order to execute the transactions I just mentioned. A good example is if you move, for example, a BTP towards an ICSD or towards another tri-party provider. So the BTP is held in our case in Monte Titoli, and the custodian bank in Italy for us is Intesa. So we sending not a confirmation. We're sending a trade towards towards Intesa, and Monte Titoli starts delivering that bond from the CSD towards the ICSD, Clearstream Luxembourg, in favor of a tri-party deal we have done, for example, with an UK-based investment bank. So we're sending instructions and instructions and instructions, and all these instructions needing confirmations. And then we have hiccups, we have differences in the final amount, in the value date. Everything has to be in place by T+2. So we have a 2-day delay in brackets until everything goes through the pipelines. Once T0 is arrived, then this delivery could queue because of insufficient collateral or cash in place if it's done against DVP, against payment. So you need to provide enough cash in Italy. You need to have enough cash in Clearstream in order to pay the delivery versus payment. And then a tri-party trade with a maturity of 1 day is getting started. And on the following day, all this chain is coming back. Yeah, so we're moving bonds from one place, we're carrying them from one from one place to the other, having lots of intermediaries. I only told you a few, and a reconciliation process where one trader in the front office has 7 back office people in the back in order to get this low margin trade. It's a repo trade for 1 day up and running. Yeah, and here we need the synergies possible by digital solution, by centralization, as Simon mentioned, in order to make it faster and in order to save costs that we are currently paying to all these intermediaries involved.
Yeah, excellent.
Is that answering your question already, or you have some?
No, this is perfect. You know, you very clearly said that the system is not just working perfectly efficient, because, as you said, there is very clearly some room to improvement, especially apparently when it goes cross-border. That's the message I take away, right? So how can digitization help here? Simon, for example, said that there could be like a system running cash across banks, right? But other systems which are being discussed would run securities across banks. And once again, other systems could be made such that they are running both cash and security. So asking very openly, maybe to you, Simon, and then afterwards to you, Jean-Marc, how can digitization and blockchain and DLT technology help here? And is it something we can expect, or is this just, let's call it, PowerPoint mode and just some thoughts which will never come to us?
I would like to add on what Andreas said in answering your question, and maybe up front. I personally believe that we'll have a network where we have multiple asset classes within one network. This includes cash, yeah, or different types of money on this network, yeah. Say central bank money, personally, I don't think so, because but Julian then can step in. I think that central bank money will be kept still with a central bank and in a central bank network. But then there will be also networks where there is commercial bank money within. There are also securities within. There might even be other asset classes in the future states in the same network as well. And this gives you the opportunity to do also cross assets settlement, yeah, within this network, where you have a true DVP, because you actually really deliver the asset, yeah, within the transaction. And Andreas pointed out the importance of the multiple confirmations, yeah, that you have to also wait for and synchronize and check. And this is exactly where the technology helps. You do not need the confirmation. Yeah, you do not need to confirm the transaction, because the transaction is visible to everybody at least involved in a DLT, yeah, in a permission DLT, or even if you go to what Jean-Marc said, also in a more public way, then it's visible for everybody. We have to check out from an architecture perspective how we handle that, not making information available that shouldn't be available. But in general, I would say, I believe it's a network where we have many asset classes within one network, and the technology precisely helps here because it gives settlement finality visible to everybody that needs to know it, and a need to know principle, and thereby you do not need the confirmation. And if you do that on a level where maybe not the banks themselves do this in an omnibus account or omnibus wallet fashion, then so to say, but really also manage nodes or wallets on an ultimate beneficiary owner level, what we will see is that we will reduce not only reconciliation between different currencies in different countries, but reconciliation between different institutes, because you ultimately settle on an ultimate beneficial owner level, and even within the institutes, because currently we have even within the account keeping of the institutes themselves, reconciliation processes in the multi-tenant hierarchy of the accounts. Yeah, you have to reconcile accounts also internally. But if you move the assets on the network on a really multi-tenant basis, on the ultimate beneficiary owner level, then you do not need internal reconciliation. So you really book and synchronize onto the nodes and wallets of the ultimate beneficiary owners, and then you simply have to synchronize also the connected accounts of the ultimate beneficiary owners.
Yeah, that was very complex, but makes sense. Who wants to add something on this? Jean-Marc, would you like to?
Yeah, maybe just to add on this, and I would only concur to what Simon just said. I mean, at Société Générale, we are a strong believer that blockchain technology could definitely bring a solution to these very complex questions we have raised and very strong needs of market participants to have an efficient global system, global network to exchange both assets and cash. With this also believe that ultimately the technological nature of an asset will be the same. Probably in the future, technologically speaking, it would be very difficult to make the difference in between an asset, whatever this asset is, and a cash component. It's just basically the purpose or the financial exposure, if I may say, that such asset, digital asset, may embed, that will make of such asset, let's say, an equity, a bond, or just a digital euro. So these boundaries, I would say, in between things which are very different in nature today will probably also basically be less strict tomorrow, and will facilitate interoperability, atomic settlement, T0 instantaneous settlement of securities. And to come back on again on the point, as I said, having a global network probably fueled through blockchain technology, where basically any market participant could connect itself to, literally for at no cost, see, witness in which state is an asset, or again a cash component, draw conclusions, extract data from this network to do any tasks it will be responsible for, and making sure by construction, and without entering into technicalities or cryptographic subjects here, making sure by design that anyone who is looking at this global network, just as today people are using the internet, anyone share exactly the same version of this registry, a golden source of this registry, will structurally improve and create some parallel run processes, which will again make all this more efficient. Today, again, in our area of responsibility, when we do issue, let's say for a financial institution, a digital bond on a blockchain, we issue it in a native format, meaning this bond is the security, and it is the only version of the security which do exist in a digital format. You do not need to replicate necessarily it in traditional systems, and this digital bond can be sent, can be exchanged in between two investors, literally, just as today people do send emails from, let's say, Paris to New York. It's working exactly the same. So when we think to the magnitude of the improvements, the efficiency gains which can be grabbed out of this, again, we believe that there is a strong case for that, and that this is probably an area where more financial institutions should dig into, at least to make sure that they understand and they can keep pace with this trend, which is also very strongly fueled by obviously central banks initiatives, the ECB in Europe, but as you know, as far as I know, all the G7 central banks are actively working on central bank digital currencies, and we also know that there are also initiatives from the private sector, notably, you know, big internet companies, GAFAs, and so on, also to propose to their users, to people, some private version of those, let's say, settlement token, settlement cash, you can name them as you wish. So we know this trend is there. It's a very powerful trend. It's something which is shorter term than what most of the people may think. It's for the next, I believe, 5 to 7 years. It's not 10, 15 years ahead of us. So this will fuel also this convergence and this very strong need for networks, which will probably be multiple at first, because it's very unlikely that all central banks, just to take that angle, will choose to issue their digital securities, their digital cash on the same network. As Simon said, some will choose to go for private networks, others for public ones, and others for permission public networks. I mean, all configurations could exist. So I think that the key word here is to make sure that we have interoperability, that we all speak the same language, because what is crystal clear is that financial markets will remain global, and hence any market participant who is active in that space will need to basically share the same language. So that's really what I would actually advocate for, is to make sure that we create an environment where at least we'll make sure that there are some standards, some norms which are shared beyond the technology which will be chosen, to make sure at least there won't be any regression in terms of interoperability among those networks, keeping in mind, and that will be my last word, keeping in mind that the existing financial infrastructure, including Target 2, will probably and most likely continue to exist for a while, because there won't be any big bang. You know, we'll also live in a world for a very long period of time where you will have traditional euro probably existing together with digital euro or digital dollar or anything you want. So we'll also have to seek for interoperability, interconnection in between these new market infrastructures, maybe blockchain-based, and for instance. So there is place for everything here. Just need to go in that direction.
Yeah, that's a good vision. Anybody wants to add something? Andreas, Julian, you want to add something?
Yeah, I strongly agree with Jean-Marc, and central banks could play a key role in this harmonization of interoperability, given that in the relevant currency area, systems already exist, and account structures are already available, who could allow us and are already allowing ancillary systems to operate, such as the technical account in Target, which is already opened for instant payments provider, for example, providers in Europe, such as EBA, RT1 or STAT in France, or Iberclear, and many, many others. They all are operating using a technical account in Target. And this technical RZ6 account in Target, by the way, will be moved to TIPS by the end of the year. So central bank 24/7, 365 money availability from a technical point will be given sooner or later. So there is standardization, and whether you call it a potential omnibus account at Bank of England and whatever the Fed will do, I assume, and that is not made in stone, that we will sooner or later end up with a Target-like setup I just described in each major jurisdiction. And that offers us a lot of opportunities along with instant payments to fund and unfund and defund, let's say, solutions like pre-funded wholesale payment systems, who could overcome the hurdles of commercial bank money coins we all used already in certain use cases, where the trust is missing once you go out your own ecosystem. So once you go cross-border, cross-counterparty, cross-bank, then you need somehow central bank money, or whether you call it synthetic central bank money or a utility backed by central bank money, in order to overcome the hurdles and pay all the assets all the digital assets out there already available, but no utility in place to get DVP done. Yeah.
Yeah, Julian, please add your points.
Thank you. I want not to go too much into deep, but I want to support the message of Jean-Marc that interoperability is key in this area, because to say it simple, it would be a bad joke when digitalization would lead to fragmentation or to more fragmentation, and this has to be avoided. I'm not sure whether central banks are the right standard setter in this respect. I haven't thought about this, but it's clear central banks are an important part of this, or could be an important part of this, and we have to decide which role we take at the end to this. And what's also clear for me is that we will have different kinds of worlds together in the next years. The DLT technology on the security side, maybe as well as on the money side, will be a complement to the world today instead of a substitute, I would say. And so we have to look on the interoperability between the both worlds. Okay.
Excellent. Yeah, we have a couple of projects which are already existing, because I just asked myself, okay, if it's so clear where we are going to, if the benefit is so significant, so why is this not yet existing? But of course, you know, such systems take some time to be built. So therefore, what kind of systems are already out there? When we had our prep call, we mentioned a couple of them. Who of you would like to quickly mention what is out there? For example, we have Finality, we have the blockbuster experiments, we have HQLLX, we have the Forge system, and so on. Let's sort them a little bit out, quickly mentioning why such projects have been created and what is the benefit. Maybe we start with the blockbuster program. Maybe who would like to add some details what's going on in this project? I think Simon could do this, or Julian, as you wish.
Julian, feel free if you like to. I'm fine either way.
Okay, thanks, Simon. The blockbuster project is a common project between the Bundesbank and the Deutsche Börse. It already started in the year 2016, and so much before we had a official discussion about a digital euro. And the aim of the project was to consider whether it's possible to combine DLT securities leg with a conventional money leg, I would say, and this in this way the trigger solution, we call it, is a technical bridge between the DLT based settlement and the conventional payment system like Target 2. And it worked quite well in the experimentation phase, I would say, and so we're quite happy about this. I do not know whether I have to go too much into depth of the technical features of the project. I can say that we are, after the experimentation were successful, we started a discussion within the Eurosystem as whether the trigger solution could be a potential complement to the digital retail euro when the digital euro will be a retail euro, and so. But it's a complex discussion. This is clear, and it's only at the beginning, I would say.
Yeah, excellent. Simon?
Maybe just to add, I think because also a question targeted also in this way, how we are starting, why we are starting this way, where is the stuff, yeah? I think what we're always trying to do is to build out also functionality with each use case, basically. That's very important, that you do not have throwaway products, yeah? You have to learn something and at best you can reuse it. And we know that the capability to connect payments and settlement into a DLT work from legacy world is just really in line with what Jean-Marc has explained before. Yeah, this integration into existing worlds. And for example, you can be pretty sure, I would guess that at least for the next 10 years, that we'll still settle T2S and digital securities in T2S and not into any kind of chain that we build. Yeah, this means for all digital securities, which is a load for us, we'll have to connect into T2S and receive the settlement confirmations of T2S into the DLT somehow and process it there. Yeah, and so this capability is core. And yes, we have now quite tight use cases. They have limits, but we do this to build out functionality that we'll need on our roadmap. And the functionality to connect existing payment and settlement systems to the DLT world is absolutely crucial.
Okay, that was some insights into the blockbuster project. And we have in Europe going on the Finality project. It's a company focusing on wholesale digital euro. Anybody wants to add some details here?
Yeah, we are part of the Finality consortium, but I don't want to explicitly advertise here one platform. I want to talk more general about pre-funded wholesale payment systems. And I already referred to the mechanics with my last statement. So the aim is to have a central bank cash-like utility in a network, and we are a network of 14 banks across Europe, including and in the US and Japan, in order to achieve these liquidity transfer towards the digital asset on blockchain. Yeah, and the smart way is, I think, whether we will get wholesale CBDC in the future or not, I assume is not decided yet. And as Madame Lagarde mentioned, the retail, if it gets started, the retail digital euro will last a couple of years until 2026. So there is a time to bridge the already existing and growing number of digital assets and to get these delivery versus payment, as well as the payment versus payment use case done. Payment versus payment for us in Finality is FX. It's about having two currencies live. For example, the British pound, the dollar, or the euro, in order to exchange a euro token versus a dollar token. Yeah, that already would boost the fluidity as well as the need of intraday liquidity, if we take into account what we do in order to keep CLS up and running from a liquidity point of view, and taking into account that we don't have a T+0 settlement choice within CLS. So the central bank backed component via this technical account is key in order to get the trust into the token we need to overcome the hurdles of acceptance. Yeah, but I originally wanted to start with HQLAX. Our first experience in this platform. This platform is trading digital collateral receipts, so DCRs, is that we heavily missing the cash there. So we can only trade bonds versus France versus Italy versus non-ECB eligible collateral. We can only exchange ISINs, but we need cash on that platform desperately. in order to get it up and running. And the platform is running, but in all, whether it's trade finance, Marco Polo, where we are involved as well, in all live platforms we are on, we're desperately missing cash. So that was the reason for Commerzbank to join Finality at all, yeah, to fulfill, to get the cash flag up and running. And given the acceptance hurdles a commercial bank or commercial bank tokens in general have, the central bank backing is needed, especially in the wholesale high volume trading capital markets world. We've nicely seen, and I'm sure Jean-Marc will tell us more about that later on, the EIB trade Jean-Marc has and many other banks have done. And here it's the same. It's the one part is the capital markets collateral and the tokenized asset, but an important part is the cash. And how do I get the cash towards towards the tokenized assets? And I think we have here three choices: the trigger chain, so using target 2, full stop. We have wholesale, we could use wholesale funding payment system, pre-funded wholesale payment systems. And we could have used, of course, use central bank wholesale CBDC if available. Yeah. And I'm curious to the discussion in front of us about these three solutions.
Yeah, we come to this in a second. Maybe Jean-Marc, could you add some more details about what you have been doing?
Yes, sure. So on our side at Société Générale, as people may know, we have built this Forge platform, which is basically our proposition to do what we do on a daily basis with our clients, meaning helping them, for instance, to raise financing on market in a better way than what all things are done today through digitalization of the securities. So basically the Forge platform is a tool to issue, exchange, and provide crypto custody services to regulated digital assets. And just for the records, we do not provide any services to cryptocurrencies, only regulated securities on our end, with the idea to basically make all these processes more efficient, quicker, but also to offer a global reach to the issuers, or a global diversification of their portfolios to investors who are going for this global market infrastructure, which is the blockchain. And we have already done a number of transactions. Some are public, other not. Lately, we're indeed mandated together with Goldman Sachs and Banco Santander by the European Investment Bank to organize the issuance of an unsecured bond in the form of a native security token, meaning a bond which, again, do exist only on a digital form on a blockchain. In that case, we choose the Ethereum public network through this Forge platform, and using those services, we have done other transactions on other blockchains. And coming back to the point of interoperability, it's very important for us to basically leave the choice to the issuer on which blockchain the best suited to deploy this security. So it could be based on private network, private blockchain, or public networks. Currently, as far as public networks are concerned, we do support Ethereum and the Tezos blockchain. I mean, each of them has its own merit, but the idea is really to offer these capacities. So we are focusing and making strong investment on the digitalization of the securities. As we already mentioned, the cash component is key to grab all the benefit of this. And since we have, I would say, this the supply available of high quality assets issued by, I mean, prestigious or less known issuers in a digital format, some central banks with whom we are working, I would say, see us as a nice sparring partner to test and learn also in the field of blockchain technology, and having a digital asset available out there, which can be this part of the leg, in between the security leg and the cash leg of their own experiment program to develop CBDC. Offer the best way basically to learn quickly and efficiency. So it's in this context that we are notably part of the Banque de France experiment program for CBDC. As I said, also working with different central banks. And as I said previously, that's also where we see this strong need beyond the technical analysis, I would say, of the technology. This very strong need to have a global language emerging. So we are starting also to make some proposal there. We have just open sourced a proposal which is called the CAST framework, CAST, which is a bit the synthesis of all those experiment issuances we have done, and which can be basically a first step for anyone willing to learn and to step into that field to seek interoperability and develop those digital projects.
Excellent. We have a couple of minutes left, so now you multiple people here have expressed a demand for cash on a ledger or somehow bringing the cash to an asset. So what is the ECB doing? What is the role of the ECB, and what is the role of the Eurosystem? Where do we see which institutions taking action? Apparently, we know that the ECB is working on the digital euro, but the more time is passing, we see that the ECB is focusing on a retail variant, but formally the ECB has not decided on this yet. They will decide in summer, and then a 2-year investigation period will follow, and then sometime later on, down the line, they start implementation. So my personal opinion is that this speed is not matching the rising demand, if I can say this. But maybe what's your question, maybe Andreas or Jean-Marc or Simon? What's the role of the ECB here and the Eurosystem? Because we also have a couple of central banks in Europe which are also driving this forward.
I might give us. Oh,
honestly, I'm sometimes a bit puzzled by the Eurosystem, given the activities of the national central banks from trigger to wholesale CBDC, so to say. And Sonnemannstraße, for those of you who are not living in Frankfurt, that's the address of ECB, is focusing on retail. Yeah, I think here I hope for some consolidation and some opinion making process will soon start in order to get one picture beside all these testings. And we heard a lot, and we constantly hearing a lot on retail. We are lagging a bit information from ECB on wholesale. So I hope for the summer too, when the journey is hopefully getting started. And I think I don't have to reiterate the versions and possibilities from a technical point of view with regards to tips, instant payments, opening tips to unlimited amounts, connecting it to the DCA of T2S towards tips in order to allow 24/7 settlement, and of course to connect a European digital currency, for example, to tips, which would be, I think, the closest connection from a system point and operational point of view. So I hope here that the testing soon ends and the agenda, a central agenda, is rolled out soon.
Maybe to add, I think what is easily being forgotten is, especially in the Eurozone, that with the political circumstances that led to the creation of the Eurozone, we tend to forget there is a competition of currencies. And even within the Eurozone and with the Euro, there still is a competition of currencies internationally. And the push of the Chinese government to decentralize the yuan, so to say, is basically a push for competing the US dollar as the leading world currency. because you have a new dimension of competition between currencies, and that's the degree of digitalization. Currencies yet had had competed in terms of stability, availability, connectivity, maybe to some extent to liquidity pools whatsoever. But this degree of digitization is a new kind of attribute for competing against each other. And I do not see a reason personally in terms of having a stable currency, relatively stable currency, that is digital, why some countries might still want to use the euro then if it's not digital, especially in the securities trading side. Yeah. So why not all the instruments going in, for example, and let's now take the political dimension into it. If the Bank of England is pushing hard for a digital pound sterling, why not, from a European country perspective, use the pound sterling for the settlement if it's digital and the euro is not? And then, and there is an incentive for UK to do this because they're losing financial power in London. So getting it back via fintechs and the digital pound sterling, this could be a re-incentive, and the pound sterling getting new competitiveness against the euro, for example, for security settlement. And then why not the European institutes just use the pound sterling because it's digital and the euro is not?
Yeah, we have 3 minutes left. Jean-Marc, would you like to add something?
Well, not much. Just also to confirm that in our view, I mean, in this question of digital euro, there is obviously a very strong sovereignty component to it, but also a very strong monetary policy implication component to it. It's more on those sides that I think questions are difficult to answer. Not really on the technical side. We'll find the solution there. Technology is mature, and bon, obviously there are choices to be made, there are governance rules to be decided, but really the monetary policy implication of a digital euro is a much harder subject to tackle, I guess.
Okay, yeah, that's another dimension which we did not tackle so far. So we see there is a lot going on. We have 2 minutes left. So let me quickly recap what we have discussed. So we found that the current world of payment is basically working well, but there are some inefficiencies once you are trying to reconcile assets and securities on the one hand side and cash on the other hand side. That's basically the next edge where companies around the world and also organizations around the world are working at. And here, I think we see that the banks are pushing this topic. We also see that central banks in Europe pushing this topic. And we had a very nice explanation coming from the group here, why digitization might help here. For example, creating a ledger for cash, then alternatively creating a ledger for securities, and potentially bringing this together and having one joint ledger for both cash and assets. But of course, this is then the next and the next and the next steps. Of course, such systems will not be built overnight. This takes some time. I think we then also discussed how digital cash potentially could be brought to an asset such that some kind of integration could take place here. And we then also highlighted a couple of projects which are existing here, the Blockbuster project, the H2LAX project, demanding cash, by the way. We had the Forge system being presented, and also Finality. And finally, as you have just heard, we have discussed also the Eurosystem, the central banks there, the ECB, and also including some kind of geopolitical aspect brought up by Simon, that in the future currencies need to become digital. It's a new kind of competition which might arise in the future. So you see, it's an absolutely fascinating area. A lot is happening here, lots of dynamics going on. Europe is developing here, and I think we'll see much more developments in the upcoming years. Thanks, everybody, and I hope, like this is now for the organizers, that we really hit the 5 o'clock point for organizational reasons. Thanks much, and thanks everybody here in the panel discussion. Thanks a lot.
Thank you.